Traders, welcome. Hi, everyone. My name is Adam, and welcome to Let's Have a Look at what's going on this week. It's been an Easter weekend, so I hope you've all had a good time. I'm just going to be very quick on this one. I'm not going to do the normal slide thing because I, respect your time if you're still on holiday. So, first of all, it's Monday. Right now, everyone's on holiday. The markets have been open, but they're part of the large numbers of certain the G8, so to speak, are on holiday. Going back tomorrow. So no news tomorrow. This week, interested to see how the UK is doing. US particularly interested to see how the US numbers, if we're starting to see any decline in that, especially the new home sales. I want to see if there's a drop in that. Right now, I'm just really you hear a lot of insane news coming out of the US. I want to see some of that showing itself in the numbers as well as the charts. And so far, we're not seeing it really show up despite how negative the news is. And I'm curious to that. I want to see if obviously there's a lag, but I want to just see if it starts showing up. Jobless claims, for example, I want to see if they climb. Home sales, what's the story there? And then UK, just curious to see how the UK economy is doing, with regards to, and the European economy as well, just with regards to what's going on in the US. And listen, before I go to the charts, this, when is it? Here we go. Thursday, guys. I'm doing a webinar here. Please help yourselves. Register here. Just go through to the ukinvesting.com education webinars and register and come join me that evening. I'm going to run through all the amazing stuff coming out of China. We're going to have a look at some Chinese stocks as well. There's some incredible stuff. Obviously now there's just believe it or not, I actually planned this months ago. This was before all of the stuff that's been happening now, but it's particularly relevant. Okay, we'll compare the US economy to the EU economy, to the UK, and to China, and you'll see the differences, and I'll talk about specific China stocks that I really like the look of. We'll do some good technical analysis and bring any questions you might have, but good opportunity to take advantage of it, especially as we're now seeing a bit of a move away from the dollar. So we'll see how that goes. Okay, back to the chart here. Let's have a look at the volatility index. So predominantly right now, still staying within this area, believe it or not. Recently, it's almost as though this is the shock to the system, and right now it's just staying the same, hasn't really moved much. The dollar index, though, on the other hand, is really heading a lot lower. It's very important. It has managed to break through the key level and is starting to head down towards the next. And we haven't been in this for a while. In fact, going back to 2022, this is COVID. So now we're starting to enter a lower band of price, which means there's really a very fair possibility that we could continue to see this move down, see that dollar index move down towards $89.90, which is very interesting. We look at the euro dollar as well here. What does it mean? It means we could actually see this head up towards 1.2, possibly even higher euro dollar. So for now, I'm trading in line with a weaker dollar, especially with GBP USD. You can see also, again, a little bit overextended here, but for the most part, guys, we're starting to break through these key levels. So I am watching this week. I think it's critical that we pay attention to these key levels. The reason I'm doing that is because either we're going to bounce back off these key levels, we'll come back, and then we'll go back up through them, or we'll break through them and pull back and then keep going. So essentially, I'm trading a weaker US dollar for now, but just observing around these key levels. Here's dollar yen, for example, sitting at a key level of support. If we break through it, that's a weaker dollar. But if we bounce off it, again, I'm still shorting the dollar, but I'm waiting for pullbacks. So really just this week, looking to see if we ultimately break through. And that'll determine what I do next week as well. Dollar Swissy, very much. Look at this. Dollar Swissy here is broken out of a monthly range, straight outside it. Now it's starting to head towards, the last time we were like at this low was when they depegged the Swissy, heading down towards these lower areas here when they had to start pushing back a bit on those markets. And so this is going back to 2015. But this showing us a movement away from the US dollar towards the euro, towards the Swiss franc. And we're seeing move towards gold. Very interesting. This is something I've not witnessed in my lifetime. Okay. Then we have dollar CAD. So dollar CAD also sitting at a relatively critical level, I think, here, because is it going to come back within the range or is it going to find support? Okay, so a lot of the majors are sitting at close to key levels, and I want to see if we get a bit of a bounce off them or if they hold or not. If it breaks down here, especially if it breaks this low, then it just implies much more downside. And again, that just confirms that weaker dollar. If we have a look here at gold, gold is within a bubble, no doubt. I've been talking about this for a while. It's still in a bubble, so I'm just long gold, but at some point that bubble's going to burst. But it could be a week from now, it could be 6 months from now. It's impossible to actually know when it's going to happen. You can see the candles are getting bigger, so it's becoming more manic. There's no divergence. The market just keeps going. So any pullbacks for me represent buying opportunities to the upside. But we are starting to become, very overextended. We might just get a weekly pullback or a daily pullback. But for now, I'm long gold. So very careful here with risk management, making sure I have stop losses in. Nothing more typical Sod's Law, then you get the very last buy trade as gold ultimately does a really big correction. And when it does, look, in the past here, in the last bubble I remember up here, 2011 went to almost 2,000 and came almost the way back down to $1,000. So almost a 50% correction there. And so it could possibly do that. When it does pop, it could find its way back down to 2.5 or even 2,000. Okay, it could happen. So, but when is that going to happen? I'll only know it when I see it. Only know when I start to see bearish candles forming on the weekly. So I think we're in this for a while for now. Crude oil, guys. Right now, it's starting to breach low. We've been talking about this for months. And actually here, I want to see how it handles resistance. So this week, looking to see if we ultimately end low, if it gets back up above that level. You can see it's testing a level of support for where it is now. But I'm looking for a continuation to the downside of resistance, especially here off the daily here, looking to see if it ultimately does head low. Excuse me. In situations like this, we have a lot of candles before you come back to a level. The odds are slightly greater that you'll see a rejection of that. Okay, normally if it's within 3 candles, it's a failed breakout. Here, this looks like it's broken through the level. Now we just got to see if it wants to stay in that level. It's not guaranteed, but we got to, it's not unreasonable. Look at this beautiful pullbacks into these areas, just beautiful. Smaller candles. Technically, I've been on holiday, but these were technically just outstanding trading opportunities, and I missed them. Okay, it happens. You go on holiday, that's what happens. So for now, I expect more downside, guys. We're still below the 50-period moving average here. We're definitely now, I think we could say we're in a bear market. Once you get that lower high on the weekly, you've got it. We're in a bear market now, and we have to see, just how much further it goes. NASDAQ as well, same thing here. We're just continuing down. So for now, I just expect it to head lower. We might get bounces where these previous lows are. We could very well get that. Very cautiously shorting stuff. So it's very high risk to short the markets like this because they tend to bounce off key levels because there's buy orders sitting here. So that's going to happen. So you just got to make sure you take profit as you go. Make sure you risk less. You've got to be like really up your risk management game. So for now, yep, I do expect this to continue to head lower. That's the Russell 2000 looking to break outside of this range, which it's been in going back to 2022, the FTSE. Okay, so here's the thing, guys. I need to see what happens with the US markets versus non-US markets. Historically, when the US markets get the sniffles, everybody else gets a cold. In other words, the impact is greater outside the US, and it follows what the US is doing. But we're seeing something different now. We're seeing a move away from US equities as well towards European equities, and to other equity, to other countries as well, to China, to Japan, UK stocks. We're seeing that happen. We're also seeing a move away from the dollar towards the euro, towards the Swiss franc. We're also seeing a move towards gold and a little bit towards Bitcoin. This I've never seen before. This is different. Something's different this time. At least for now. At least for now, it's different. If we see it suddenly start going back, fine. But for now, we're seeing it move away. So it's really interesting what I need to see, because if we need to see an uncoupling. This is critical. We need to see an uncoupling for outside the US. In other words, non-US indices, the German DAX, the FTSE, the Nikkei, Hang Seng. We need to see them coping better than the US, because if they don't, we're going to have a global depression, because that's what happened 100 years ago, the last time tariffs were imposed like this. And we're going to have a global depression. But if they do manage to uncouple, in other words, if they can come away with less damage, then it's going to be a very different game. It's going to be a very different game, guys. So you want that. Trust me. You want it to uncouple from the US stuff. Otherwise, we're all going to be paying the price for this. Look it up. There were middle-class people who were living homeless after the 1929 crash and the global depression that followed. They were living in tents in Central Park and, standing outside soup kitchens. And that was the wealthiest nation in the world at the time. So it's bad if it happens. Not trying to fearmonger, just saying, look it up, see what happens. Okay, the DAX as well. So the reason I'm watching this, guys, is I want to see them recover. Now, one of the things I want to quickly point out here, if you look at the monthly, okay, this is what happens. If I just enlarge this, normally what happens is you get all these red candles coming back into the moving averages. Then you get a green candle, which is a sign that the buyers are returning to the markets. Okay, I don't think that's going to happen this month. It could, but I don't think it's going to. I don't think these candles right now are going to turn into green candles. They could, but it's the least likely outcome. I think that means to me that the earliest we would get a green candle, is potentially end of May, which is 5 weeks away. That's the earliest. We might not even get one in May. It might be another red candle, but I'm just saying that the earliest I think we're going to get one is May. So that means that for now, I'm just bearish on the markets. I can't expect anything to change until then. So I just think relax, and we'll see if we get a recovery. Okay, we'll see if we get a recovery then. And that's what I'm looking for in the DAX. I really want to see these guys survive. Stay above that 50-period moving average. Anything that can stay above the 50-period moving average on the weekly is doing incredibly well. Let's have a look at Bitcoin. So Bitcoin's also doing quite well. I'm watching this monthly candle. Bitcoin so far is setting up for a bullish continuation to the upside. And it's got a very nice double bounce here as well. Looks really good. But it is range bound. So I'm going to mark the range because as long as it stays within the range, it's not going anywhere. Okay, so what is the range? The range looks roughly like this. Okay, the bottom isn't right. Let me just correct the bottom. But it is range bound, and we need it to break and close above that. So I need a bullish candle here, then we'll see more upside potentially back up to that 100,000 level. But if it doesn't, if it closes down and it doesn't close, if it closes lower than it is now, then I think we'll probably not get that further upside. Ethereum breaking down further down below here, well below that 50-period moving average. So this is more bearish than anything else. Clear bullish divergence here, so it's slowing down. We could see it potentially start to move up a little bit. Let's have a look at the Mag 7 and wrap this up. Back down to level of support. Again, all of these look like they have further downside, to me anyway, over this coming week. They're just heading down, coming down. So real key thing here is just testing key levels, especially here which was resistance. Can it find support? Amazon as well, dropping below that level. Okay, back into that area. Alphabet as well. So for now, I just expecting more downside, guys. As I said, there were some great trading opportunities, missed them all. And for now, and they were relatively low risk for these parts. But yes, here, for example, we're going to stay above this level of resistance, find support here or not. And it's not looking great. Nvidia as well, looks like we might see more downside. Tesla as well. I've drawn this in. Sorry, this was a very complicated thing. Let me just explain this to you. So it formed a wedge. And this was something I didn't know, actually, that the last time I spoke about this was that I said, look, if we break to the downside, you're likely to see it go to 100. I still think that's feasible. But what I didn't mention is that the success rate for that pattern is actually not very high. And I think I want to emphasize this. It's like a 52% success rate, meaning that honestly it's 50-50 whether it breaks that and continues down. And I think I want to emphasize that certain patterns have a much higher rate. This is the weakest one of all, meaning at this point, yes, it is breaking, and yes, it could go down to 100, but I wouldn't take it depending on that pattern. I just wanted to show you the pattern, talk about it. Yes, technically, I think the really big thing is when we start to break below these lows here, 100 is not going to look like a fast stretch, especially once you start to break below these lows. If you break that low, 100 is immediately there. Might as well just go there. For now, it is looking weak, and I expect it to continue to head lower. Okay, plus tomorrow night, earnings, quarterly earnings. This is what I anticipate. There might be a bit of a bump from it. We'll see, because the last one we were expecting negative numbers, and they did. There were negative numbers, but then there was an unexpected boost from carbon credits and from Bitcoin, and then all kinds of just, sales talk about future things that, are going to happen. And I think what's happening now is shareholders are getting tired of being told next year, full self-driving, Mars, robots, robo-taxis, and so on. And so I'm curious to see if there's actually a negative reaction. So almost always, despite the fact that the fundamentals coming out, the numbers look bad, the market tends to respond positively. So I'm curious to see what happens tomorrow night. I want to see if they, I would anticipate that the numbers come out are not great. And normally you would expect the market to drop heavily on that. But Tesla can defy gravity sometimes, and we'll see if there's a bounce off it. It's really something that I want to see, like what happens this week. So very curious to see. It's at a key level here. So does it bounce off it, or does it fall through? And if it does fall through it, remember that I would say the next level down is 178 in this area, somewhere around that. Let's see if that's the case. If it manages to come up and break these highs, then it, especially get above that 50-period moving average, then it's kind of something else is changing. Okay. So let's just see how that plays out. All right, Netflix. Again, Netflix showing some signs of exhaustion here. I think we might see a bit of a head and shoulders starting to form here. But that monthly candle actually looking relatively bullish at this time. Not all stocks go down. Sometimes, so within the Mag 7, this one might be doing very well. What was the other one that tended to do well, which is supposed to be Meta? No, Meta's actually taking a hit. Netflix seems to be doing okay. So let's just see how that is. It's got a level of resistance right here. We're going to have to see how that does by the end of the week. Guys, trade cautiously, please. I like gold. I like the weaker dollar. But the indices and some of the stocks could be volatile, bounce around, so be extra cautious. All right, and don't forget about the webinar. If you want to join me then, that would be great. It'd be great to have you. Thank you very much.